Carvana, which operates that big online used car site, reported its fourth quarter earnings yesterday. Now, the results topped expectations, at least going by the headlines, but the company's stock has dropped today. Let's get more from Marvin Fong, analyst at BTIG. Marvin, thanks for joining us. Really appreciate it. Can you tell us why would Carvana stock be down today?
Well, thanks for having me. Going into the print, the stock was up 39% year to date, 60% versus the low after a short seller report came out the first few days of the year. So it had a full head of steam, and quite frankly, it was priced for perfection. You're right that the headline numbers did beat on EBITDA, on units, across a wide variety of metrics, but some indicators, some performance indicators that we follow, particularly the retail GPU, was disappointed some investors. So it wasn't the kind of shock and awe report that we saw the last couple of quarters where they beat expectations by a mile. And so it's understandable we're seeing some profit taking here. And in fact, we kind of flagged that over the weekend in a note we put out to investors that we almost expected kind of a knee-jerk sell-off.
It's interesting. I'm just looking at your analysis here. Carvana sold just over 400,000 used cars last year. Sounds like a lot, but it's only about 1% of the U.S. used car market.
Yeah, that's right. The U.S. used car market is huge. It's normally around 40 million units. It's down to maybe 36, 37 million units as interest rates have come up and affordability is kind of stretched. So there's been a bit of a pullback, but it remains an enormous market. And you're correct that Carvana's market share compared to that total market size remains quite minuscule.
You reckon that the company has put distance between itself and rivals, other online car vendors. In what way?
Carvana just has a very different business model, one that, it buys up inventory and brings them to its reconditioning and fulfillment centers. So it's able to drive a lot of leverage by just pushing through tens of thousands of cars through each reconditioning center. So there's a lot of efficiency there. They don't have brick and mortar dealerships, so there's very little, sales force costs there. They don't have a lot of real estate, so a lot of rental expenses saved there. And quite frankly, a big differentiator is the fact that they have such size that they're able to sell a lot of their loans into the asset-backed securities market. And there's very good margins there. Only a handful of dealers, CarMax being one of them, have the scale to aggregate that many loans and to sell into the ABS market, but it's very lucrative. And so Carvana also extracts extra profit there.
And you're looking for some pretty big growth here. So last year revenue was just under 14 billion, but you see it going to almost 16 billion this year and not far short of 19 billion next year.
That's correct. It's primarily a unit-driven story, like we just talked about how the market share is so low. But what's very strong about the story is that they have a lot of capacity in place, that they had, built up a lot of capacity, before 2022, before the Fed started tightening and kind of threw the used car market for a loop. Carvana was rapidly growing, and so it built out a lot of capacity, and so they can, easily grow from that 400,000 units into the capacity that they have. With very little incremental cost. So it's really just a matter of getting the reconditioning, labor in there and driving that throughput. And then on top of that, they have the Odessa locations. They acquired Odessa in 2022. And, when all those locations are built out, the capacity rises to almost 3 million units, right? So there's just ample runway for them to grow volumes, and that's kind of why we see that growth trajectory for the company.
And what's the advantage for a consumer of buying with Carvana as opposed to going to, well, what a nightmare, going to Facebook Marketplace or Kijiji? Nobody wants to do that if they can avoid it, or going to a dealer. Why does Carvana offer advantages?
So there is going to be that segment of the population. It's different surveys will tell you different things, and it changes with the pandemic was sort of the high, but as many as 35% of people want to buy a car fully online, and Carvana is that option. the advantage is obviously convenience and selection, because Carvana, if you're willing to pay a delivery fee, there's going to be cars in your area that can be delivered for free. But if you're willing to pay the delivery fee, you have a choice of literally thousands of cars, and your typical dealer lot will have 200-300, stateside. So, a lot more selection. You get what you want. No haggling. It's a very clean process, and the car is delivered right at your door. A lot of the rest of it's very automated, and it's kind of a one-stop shop. So the financing is provided by Carvana. Carvana takes your trade-in, so there's no dealing with, your credit union to get a loan. Carvana has a limited warranty, a return policy, so they really try to remove all the frictions there, and so that's going to appeal to a lot of potential buyers out there.